Hi guys, welcome. Intel has just released its latest quarterly reports for Q1 of 2021 this week. Revenue is flat from the previous quarter and operating income is down 37% from last year. In this video on Intel stock analysis, I'm going to dive into the financials and the technical charts to see whether is Intel worth investing in, is it a buy or a sell at the current price, and whether Intel is trending up or down from the technical charts. So let's jump into it. The revenue has been on a generally steady growth since 2016 from $13.7 billion to $19.7 billion in the most recent quarter, but it has slowed down in recent quarters. The year-over-year revenue growth that has seen positive growth in 2018 and 2019 has turned negative as well. Intel has been facing intense competition from its main rival AMD. Intel has been a leader in the processor arena for many years, but finally, AMD caught up in 2020 and has released its processors that have even higher performance. The intense competition from AMD is evident in the trend of flattish revenue growth. While the revenue has turned flat, the cost of revenue has continued to tick up in the recent quarters. The result of flattish revenue and increased cost is the drop in gross profit. There is a clear drop in gross profit from Q1 of 2020 from $12 billion to $10.8 billion. The gross margin has been on a steady decline since 2018 from the high of 64.5% to the 55% in most recent quarters. Still, these are very good margins. Intel can achieve this level of margins due to three key reasons. Firstly, they are in a high technology space that is difficult for newcomers to enter the market. Designing and producing processors is extremely complex. Secondly, their main competition is just AMD, although they have other competitors such as Nvidia in the other areas such as GPU. Thirdly, Intel has been continuously improving manufacturing such as their 7 nanometer wafer technology. In the processor space, the smaller it is, the faster and more powerful it becomes, and that translates into higher margins. The total operating expenses has been on a steady decline, but have jumped in the most recent quarter from $5.4 billion to $7.2 billion. I did some checks to find out why and found this was due to a provision of $2.2 billion for litigation on IP infringement by VLSI. A further check revealed that Intel has been facing such claims from VLSI and a few other companies since many years back. In 2020, Intel stated that they believe these proceedings are not expected to materially harm the financial position. However, they also stated that it comes with inherent uncertainties and unfavorable resolutions could include substantial monetary damages. In the most recent quarter, Intel has now accrued a charge of $2.2 billion due to the VLSI litigation. This news probably spooked the investors and the share price dropped right after the results announcement the past week. This is the reason why I like to turn the financial numbers from tables to charts because it immediately flags out such anomalies. Intel is a profitable company and has been producing operating income consistently, but the income has dropped in recent quarters and is heading lower. The net income is also in line with the operating income. The net margin has been between 24% and 34% for the past 2 years, but it has dropped to 17% in the most recent quarter. The trailing earnings per share of the last 4 quarters is $4.45 and is following the same pattern of decline that we have seen in the net income. Intel has good positive cash flow from operations, really solid consistent performance. There is a constant cash outflow in investing activities. It is primarily due to the investment in property, plant and equipment. Besides that, there is also investment in marketable securities. The trailing free cash flow for the last 4 quarters has gone into a slight decline compared to the healthy growth in 2018 and 2019. Free cash flow is operating income minus the investment in property, plants and equipment. It is an indication of the real earned income after investing in continued operations in the business. While Intel is pulling in good numbers, the trend shows it is probably a mature company with limited room for further growth. The cash outflow of financing activities is mainly due to dividend payments and stock repurchase. As you can see here, Intel has a very good stock repurchase plan. The net effect of all the cash outflow in investing and financing activities has resulted in a flat cash position for Intel. Although Intel has good cash flow from operations, the cash position has been flat in 2018 and 2019. There was an increase in 2020 but has since dropped back. The cash position is evident in the quick ratio that is sitting at a low 0.2. Overall, Intel's balance sheet is steady with the total assets having grown from $105 billion to to $150 billion, and the total liabilities have increased from $45 billion to $62 billion. Property, plant, and equipment form the bulk of the assets at $57 billion. Goodwill is at $27 billion, and intangible assets account for another $8.4 billion. The rest of the total assets are formed by accounts receivables, cash, marketable securities, and prepaid expenses. Intel has a long-term debt of around $33 billion, but the current debt level is only around 22% of total assets, so I'm not too concerned about it. Furthermore, the interest expenses are only about 5.7% of profits, so the balance sheet is quite strong. The book value per share is at $21.77 currently and has been growing. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $59, Intel is trading at a multiple of 2.7 times price to book. That is a very good value. Usually, value investors look for a multiple of below 5. As the year-over-year revenue is hardly growing in recent times, the PE to growth ratio is negative. The PEG ratio measures the PE in terms of the revenue growth from the same quarter the previous year. It is used to value the stock price based on revenue growth, and clearly, Intel fails this test. Intel share price has appreciated from $12 in 2009 to $68. The longer-term trend is still on the way up. Taking a closer look at the daily chart, the recent price activity has formed a strong support at $44 and there is an overhead resistance at $68. The most recent price action from the support of 44 to 68 is captured in the blue trend channel. This channel has been broken in the last 2 weeks. I believe the market has anticipated mixed results for Intel, and when the results were confirmed, it just dropped from 64 to 59. Now $59 is also another support level that is holding the price, and the next support is at 54. AMD will be announcing their results this week, and I'm expecting AMD to post a strong quarter with their new range of processors and GPU that they brought to the market end of 2020. If that happens, Intel might take another beating and move even lower. So is Intel worth investing in? It is profitable and has a strong balance sheet. However, the profits have started to decline. Is it worth it at current prices? The valuation of 2.7 price to book is a very good value for a technology leader with a strong net margin of 17%. Technically, while the overall trend is up, the price is under pressure and I would like to see it stabilize first. AMD will be announcing their results this week and I'll be doing a similar video for AMD. And I will also be doing a side-by-side comparison of AMD and Intel similar to the one I did for 5G stocks. Subscribe to my channel if you have found this sharing useful and hit the notification bell so that you don't miss out on any of my future videos. And I'll see you soon in the AMD video.